Hello everyone, welcome to my channel where I'm going to be talking things around investing, stocks and building my wealth for the future. I'm going to begin with a portfolio monthly update where I'm going to break down how my investments have performed over this past month. We'll look at the gains, the losses and any new positions I have taken. I did take in one over the last month, but that'll be right at the end. So if you're into stock investing, make sure to hit that like button and subscribe for more updates. A bit of background about me is I started investing during the pandemic and then I did quite well. I think I made about a 70% return in about 3 months. It was a bit crazy back then. And then I sold all my stocks and I've just started getting back into it recently because I'm now in a position to do that. But I've previously only just moved all my stocks into a stocks and share ISA. I was previously in the invest account. So just bear that in mind. Quick disclaimer before we start, this video is for informational purposes only and should not be considered financial advice. Always do your own research before investing, as all investments carry risk and your capital is at risk. Okay, let's start with an overview. So this past month has been interesting. There have been some ups and some downs, some days that were in the major red, but overall I've come out with a 6.9% return, which is £11.84 profit. First up is my investment into the JPMorgan Global Growth and Income. This is an ETF. I've invested roughly £38 into this, and over the last month it's gained by 3.79%, which has got me a return of 83p or 2.18%. Bit of a slow burner this one, and I'm not sure, but I might switch this over to the S&P 500, but I like this. I just like this fund, if I'm honest. No real news in the last month apart from it's going to merge with the Henderson International Income Trust. I don't know what this will look like, but it's due to be completed by July. If anyone has any knowledge on what could happen here, please let me know below. Next is Rolls-Royce, which, as I mentioned, I invested in stocks during the pandemic, and this was one of my stocks where I had an average of around 90p a share, 80-90p a share. So I wish I held on to that. I think I had about 80 shares in total, and now I have just under 4. But it's grown by 4.29% in the last month, and I've got a return of 3.12%, which is profit. So can't complain. If you don't know what Rolls-Royce is by now, it's a luxury car brand. It's huge in the aviation sector, and their nuclear sector is expanding. And that leads me on to news over the last month. Nothing strenuous apart from they've just signed a £9 billion contract for UK nuclear submarines, which I think is an 8-year contract. So that's quite nice. And hopefully they pick up a few more contracts for the nuclear department, because I think that's not working at a profit at the minute, or it's very low profit off the top of my head. So it'd be nice for that to keep growing and bring in more money. Next up, we've got Microsoft, which has been a bit of a roller coaster. And if anyone is invested in tech stocks, they will know the start of the year has been quite volatile. And Microsoft is one of those. I'm currently down 3.60% before you take in the FX impact. And for the month, they're down 3.49%, mainly due to a slowdown in its cloud computing segment. But going forward, I think Microsoft's just one of those companies that it's never going to disappear. It might have a few shaky months, but it's still going to stay there. It's pretty much a staple of technology at this point. And analysis still have a 12-month price target of $497, which is $85 from its current price. So I'm still bullish on this one. This one's a long-term hold. I'm slowly building up my ownership of these stocks because it's quite expensive. Moving on to some good performers now, and we're going to start with Lloyds. So my investment in Lloyds has grown by 12.93%, which is quite a good return. The banking stocks have been doing well with rising interest rates recently, so this gain is not a surprise. And in the news, they're currently going through a big restructure, particularly in the digital department, and expect to create 1,200 new roles. And they're also closing 136 branches. So they're going to be saving some money there, potentially getting rid of some staff. It's just going to be better for the bottom line, really. And moving on to Barclays, which is similar to Lloyds, has had a solid month of growth. That investment is up 12.6% as well. And the major news recently is it had a massive IT glitch that lasted 3 days. A lot of customers have been affected, but it doesn't seem to have impacted the share price. So it'll be interesting to see what happens with that. And also they're in talk to become a credit partner with Apple, which can be quite good. Although Apple's sales are slowing down, there's still more business for Barclays, so I can't complain about that one. Next up in my portfolio is Take-Two Interactive, which has also been a strong performer. If you don't know what this is, they own the likes of Rockstar, which obviously has the new GTA coming out this year, which, if I'm honest, besides the business being a good business, that is the main reason I bought into it. I'm going to keep buying until about a month, maybe it's 2 months before GTA is released, let it sit and then sell my stocks. That's my plan for this. But over the last month, it's returned 10.73% in total once you take in the FX impact. And recent news is a lot of institutions have upgraded the price target, and it's sitting between 225 to 235. Obviously they've got a lot of sales coming at the end of this year and next year, so it'll be interesting to see what happens with this one. I'm bullish on this one, but I do only aim to hold this for about a year, maybe just 2 years if I'm honest, see how it keeps performing. But yeah, that's my aim for that one. Next up, we're going to a poor performer, which is Marks and Spencer's, a supermarket chain in the United Kingdom, and it's been performing poorly after Christmas, but it's slowly started to climb back up. So this last month I have a loss of 4.97%. There's no real major news on this. I'm just hoping it recovers well, which it seems to be doing, and I'll continue to monitor this one, but it's not looking good at the minute, if I'm honest. This is the last stock before we move on to my new purchase for this month. So TKO Group Holdings has been a great performer this month. As you can see, I've got a return of 16.02%, which is quite good. The share price has moved quite well. If you don't know what it is, they're a sports and entertainment company, and that's very strong at the minute. And these specifically own the UFC and WWE. Obviously WWE's recently gone on to Netflix, so I think this will just keep increasing because Netflix is accessible to a lot of people. So people who couldn't previously watch WWE are now consuming this, and that means it could turn into more merch sales, more people going to shows. You just never know. I think I did see recently that they're eyeing up a $1 billion deal for the ownership rights of UFC. Not sure how accurate my thinking is there, or my memory, sorry. But in news wise, the 10% owner has recently bought around $40 million worth of shares. So that's quite significant. And I like the look of this one. It's performing well. I'm not selling it anytime soon. And finally, it's time for my new purchase this month, which is Grab. So if you don't know what Grab is, it's a Southeast Asian super app. It's similar to Uber, but with more diversified services, which includes food delivery, ride hailing and fintech solutions. They currently have the monopoly over Southeast Asia. Anyone I've ever spoken to that's gone there has said they use the app every day, and I see strong growth potential here, and I'm excited to see where this investment goes, purely because they're about to start turning a regular profit now. So previously it's got strong fundamentals and it's improving every quarter. So going forward, it should become the profitable business it deserves to be. Right now it's not that. The earnings come out in 2 weeks time, so I'll be covering them. And yeah, I'm quite excited about this one. I'm just going to hold on to this until I think it's time to sell. But I see this going quite far. In terms of performance, I've bought just over 8 shares. And at the point of making this, I have a 8.9% return before the FX impact. So yeah, it's been going well. Be interesting to see what happens after the earnings, but this one's a long-term hold, so I'm just going to keep building this one up. So overall, my portfolio has been the green with some solid gains in the banking stocks and some decent losses by Microsoft and Marks and Spencer's. But I believe in the long-term strength of both of those, otherwise I wouldn't have invested. And I'm quite excited about my new edition of Grab. It's the first Asian stock I've owned, so a bit more diversification there. And that wraps up this month's portfolio update. Let me know below what you think of my picks. Are you holding any of these stocks? And if you found this update helpful, don't forget to like and subscribe for more investing content. And I'll see you very soon